Here's how to make 30K in the next 30 days. What I'm about to share with you is simple, but it's not easy. It's not easy because most are not willing to put in the work and not willing to stay consistent. So you want to go to the Google Chrome web stores, all right, for extension, punch in deal machines, and here is the app that you want to download, okay? This app right here. Once you have downloaded, this icon is going to pop up on your screen. Go ahead and click on it. Then in the search bar, just punch in your city. Next, you take this little guy here and you put in any neighborhood you want. After that, you just use this virtual map to go up and down the streets to look for rundown properties. Once you find one, then go ahead and pin it. Then click on the deal machine logo here. And then you can go ahead and add it to your list. Next, you just need to hit send mailer and it will send that homeowner a postcard. Then when the seller calls you, see if you can negotiate and lock that property up in a contract at a discount using this formula. Then go to Craigslist, search We Buy Houses. All these investors are going to pop up. Call them, see if they're willing to buy it for 30K more than what you got in the contract for.
How to get started in real estate with little to no money. There's a strategy called wholesaling. Step 1 is to find a crappy vacant property. Once you find the crappy vacant property, then find the owner's phone number. Some of the websites that can help you do this are whitepages.com and batchskiptracing.com. Step 3, call the owner and ask if they want to sell the property. Let's say the owner says they want to sell. Then you go visit the property and make them an offer. Let's say you offer them $40,000. Then what you want to do is sign the contract with the owner for $40,000. Now instead of you buying the property for $40,000, instead find an investor that will buy the property for $50,000. Once you find an investor, sell the contract to them for $50,000. So now the investor pays $50,000, the owner receives $40,000, and you get the difference of $10,000, and that's wholesaling.
Here's one of the best work from home jobs. This is actually one of my biggest secrets and I debated sharing this, but let's keep this a secret. Here are the 3 things you're going to need. 1, a computer, 2, how to read, and 3, how to type. So this is freelancer.com and people go here when they need services. So we want to find build a website jobs. Just so you know, you don't need to know how to build a website to do this. So if we go through these listings, we can see that a lot of people want websites. This person wants a website for $2,000, this one $184, $168, and $198. Once we find a buyer, we come to Fiverr.com. Type build me a website and click search. Sort by budget, $10 to $80. And then we can see all these freelancers that know how to build a website. I recommend using someone with a lot of reviews. So take that $2,000 job, hire someone for $50 and keep the profit.
There are 3 reasons why I do not like Shopify dropshipping and why I sell on Amazon. Number 1, with Shopify dropshipping, no one knows you exist. So what you have to do is you have to run a ton of traffic to your website to get someone to purchase. And everyone says, oh, it's a $0 startup. That is a bunch of BS. You have to spend a lot of money in ads before you get any purchases on your website. Number 2, the ship times are ridiculous. No one wants to sit around and wait 10 to 20 days to get their products. They rather shop on Amazon and get their products in 1 to 2 days. Third reason is Shopify dropshipping is not a long-term viable business model. And what I mean by that is the products that you start selling, they may last for 1 or 2 months and then they go dead. Then you have to find a new product. Where Amazon, I've been selling the same exact products for the last 2.5 years and they just keep printing me money every single month. So moral of the story, avoid Shopify dropshipping and sell on Amazon. If you guys want to learn how, then hit that follow button.
How to retire a millionaire. If you're between the age of 18 and 25 and you live in the USA, step 1, open a Roth IRA. You can do this by going to betterment.com, clicking get started, invest for retirement, not currently retired. How old are you? Let's say 18. Annual pre-tax income, $6,000 because you're 18. Type of retirement account, Roth IRA. Click continue. Drop a spicy email. Get you a strong password. Just finish filling all this out, open an account. When you're done, you'll be good to go. Step 2 is earn or obtain $250 a month. Then contribute that to your Roth IRA. By contributing like $250 a month from the age of 18 all the way down to 65. And if you do $500 a month from 18 all the way down to 65, maybe you're balling on a budget, $100 a month, not bad. So you don't start till 25, $500 a month, still looking good. And that money is all tax-free. Seriously, it's tax-free.
Michael and Mary get married at 25 years old. They have a combined income of $100,000 per year. They decide to invest 20% of their income into their 401ks. So you take 100K minus 20 and they can live on 80 minus tax. They never get a raise. They never increase their 401k contribution. They never invest anywhere else. And their 401k investments grow at an 8% return. And by age 60, this is how much they have.
I just invested over $50,000 into oil tanker stocks, and here's why. So as you probably know, oil just crashed and prices are historically low. And that's basically because of supply and demand. So oil companies are looking to store oil until the prices go back up. And that's where oil tankers come in. The cheaper that oil is, the greater the demand for storage becomes, and the more that tankers can charge to store oil. Right now, tankers are charging upwards of $410,000 a day to store oil, where normally they charge about $23,000 per day. The CEO of Nordic American Tankers was on Kramer recently to give some insight on the tanker industry.
We are making a lot of money at this time, improving our balance sheet tremendously. And I have never seen such a strong market yet. And I've been around for a little while.
This isn't investment advice. Do your own research. These are the companies I'm looking at. Subscribe for more.
Have you ever wanted to collect rent every month instead by owning apartment buildings like this one in Atlanta or this one in LA? Well, you can, and all you need is $500 to start. And you don't even need to be accredited.
It's kind of cool because you don't have to go through the hassle of actually buying a house or managing properties like I have to do.
So if you're interested in an easy way to invest in private real estate, you should check out Fundrise, Realty Mogul, or CrowdStreet.
And let me know what you think in the comments.
Things they don't teach you in school, part 4. Buying a car. Now this car is worth about $50,000, but as soon as you drive it off the lot, it's going to be worth 10% less. After a year, about 30 to 40% less. Cars depreciate in value really quickly, so for young people, it's almost always better to buy a used car.
If you bought 100 shares of Apple last week at the weekly low of $215.10, and then all of a sudden 4 days later you sold it off at the weekly high of $258.46, you'd make a profit, and you'd also have to pay something called capital gains tax. But do you know how much you'd have to pay? In that scenario, your gain was $4,336, and that will be used for the cost basis of your taxes coming up. So now that we have a stock gain, if we actually realize that gain, which means we get paid out on it, if you hold it for less than a year, you'll actually pay more in tax. So since we own that stock for less than a year, we're actually just taxed at our ordinary income rate. So in this case, $60,000, we're just taxed at a 22% rate, which is $954. So for short-term gains, if your annual income is actually a lot higher, you'll pay more in short-term capital gains taxes. If you hold the stock for more than a year though, you actually pay long-term capital gains rates, and that's a flat fee of 0, 15, or 20%. And the majority of cases will fall into the 15% bucket.
You see, the business world is funny because everyone makes fun of Volkswagen, but once you see the cars that Volkswagen owns, your mind will definitely change. The Volkswagen Group owns the car brands Audi, Skoda, Bentley, Porsche, Lamborghini, Ducati, and Bugatti. But deep this, if someone walked up to you and asked you, what company do you think is worth more, Lamborghini, or Porsche, or Bentley, or Volkswagen, you know what you'd say.
Stock market crash course, lesson 1. You need to know the float of the stock before you enter any trade. The float of the stock is the amount of shares offered to the public. To find the float of the stock, you'll have to go to yahoofinance.com. Knowing the float of the stock will help you determine the demand. To find the demand of the stock, you'll need to put the volume over the float. So how many shares are traded so far divided by the float of the stock you're trading. That'll give you the float rotation. For example, if the volume for the day so far is 4 million, and the float of the stock where you're looking up or trying to trade is 2 million, the float rotation will be 2. So the float rotated twice. And the more the float rotates, the more likely it is for the stock to go to higher prices. So if you want more crash course concepts, just give me a follow and like this.
As you probably know, Kanye West has teamed up with Gap to make a Yeezy Gap apparel line, which will be introduced in the first half of 2021. Last time Kanye West teamed up with an apparel company, it did wonders for their stock price, increasing it over 200%. So now let's try and quantify how much revenue Kanye West was actually able to create for Adidas, how he might be able to do the same for Gap, and what that might mean for their stock price going forward. According to Google, Adidas confirmed their new collaboration with Kanye West in late 2013, which was then revealed in early 2015. Now, if we take a second to look at Adidas pre-Kanye revenue growth, it wasn't looking too hot. Now, as we change from pre-Kanye to post-Kanye, you can see business was booming. If Kanye West can somehow help Gap increase their revenue by 25% over the next 2 years, and if Gap is able to clean up their balance sheet, this could drive Gap's market cap to close to $5.5 billion, resulting in a stock price of about $18.50, a 48% increase from current levels. I'm gonna wait and see what coronavirus does first. According to legendary investor Bill Miller, this market is one of the best buying opportunities of his lifetime, and he's 70. This coming from a guy that more than doubled his money in 1 year. So if you're thinking about investing in the stock market, now's the time. But we're in a recession, we shouldn't be investing. That is wrong. Now is when you should invest to make the most money in the future. And this is what I'm buying. Number 1, AT&T, growing their dividend for 35 years. Number 2 is McDonald's, growing their dividend for 43 years. Number 3 is PPL Corporation, growing their dividend for 20 years. Number 4 being General Dynamics, growing their dividend for 22 years. Number 5, Realty Income Corporation, 26 years. Next we got Pepsi, 47 years. Then we've got Apple, a modest 7 years. Healthcare favorite Johnson & Johnson at 57 years. Pharmaceutical favorite at 6 years. Financial favorite Accenture, 9 years. And ExxonMobil at 37 years. Why are dividends important? Net income is how much you have after taxes. Dividends are then paid with that money. Financial strength.
What makes you rich? Employees make their bosses rich. Consumers make the businesses rich. The debtors make the banks rich. Paying taxes make the government rich. And investors make themselves rich. Be an investor.
The true cost of buying an iPhone. The iPhone cost $599 when it first came out in 2007. If you invested that $599 into the Apple stock in 2007, you'd have over $14,400 today.